Okay, let's kick off module 2.3. We're going to talk about how to keep your cash. So in this section on cash flow, you just went through the guide by Philip about how to know where your cash is going and how to, in 2 minutes, summarize what's been happening with the cash. Now, what we want to do ultimately is not just know what's happening with it, but make sure that we have enough of it and make sure that it's growing so that we can get the things that we want in our business. And so, as I said in the introduction, there's really two sides of this. There's kind of the defense side and the offense side. The defense side is making sure you keep the cash in the business. The offense side is where you grow it and multiply it. So in this section in 2.3, we are going to go into how to keep the cash and some things you can do to make sure that that cash doesn't bleed out of the business and that you are having a healthy cash flow with the business that you have. The first piece in doing that is understanding your profitability. And so that's just such an important word in all aspects of business. And there's actually this quote from Michael Porter where he says, if your goal is anything but profitability, if it's to be big or to grow fast or to become a technology leader, you'll hit problems. And his point is we focus on a lot of things in business, and we have a lot of goals and objectives and areas that we really focus on, but all of them really come down to whether or not you can be profitable. And when you get the profitability down, then that gives you some flexibility and freedom to do some of the things that maybe are more exciting or more demanding of your attention. But the number one thing is profitability, which is, without it, you're always going to have a hard time generating cash flow. Of all the things that we're going to talk about in this course, most of them are not going to help you if you don't have a profitable business model. And so what I want to do here is just talk through some key questions that are good to have a handle on so that you can understand how your business model is. And if you were to grow, if you were to expand, would you have a good likelihood of adding to your profitability or adding to your cash flow as things take off? Because getting the business model right is such a foundational piece of producing excess cash flow. So some of those questions that I want to work through. The first one is, how much does it cost to acquire a customer? So this is something every business needs to understand. To get a customer, what does it take to get them? Because if you can understand what that cost is, you can invest in certain activities and know that if things are working well or not based on how much it costs to get a customer. And so understanding that has a lot to do with your profitability, and it goes hand in hand with the next question, which is how much does it cost to deliver your promise to a customer? So you need to know both of these pieces. That's basically everything that is involved in running a business, is acquiring customers, delivering what you promised to that customer, and then repeating it again and again and again. If the cost of both of these things is more than what they're paying you, then you have a bad business model. It's not going to work. And the more you scale it, the more you grow it, the more problems you're going to have. And so you have to understand what these costs are so that you can make the necessary adjustments that allow you to grow. And so it's important to see it, because when you grow, that cost to deliver your promise to a customer continues to expand as you add more fuel to the fire, because now you have to add support staff and technology and things to support your growth. And so it's good to get a handle on this, what that basic model is, so that you can start to look ahead and forecast it. And if things are not in alignment, if that cost of acquisition plus the cost to deliver is higher than what you're being paid, then you really need to look at your prices, or you need to look at what you can do to deliver more efficiently or to get customers more efficiently. And so these questions are really good to understand to help you determine profitability, which will then in turn determine your cash flow. The next question that really works there is the lifetime value of a customer. So in a lot of businesses, like for our accounting business, for example, we may not make a ton of money at the very beginning of the relationship with the client, but if we have a profitable relationship on a monthly basis and we're able to keep the client for 2, 3, or more years, then that client then has a lot of lifetime value. And so people that have recurring business, recurring engagement with customers or clients need to take that into account. And so if your cost of acquisition is $250, you need to not only think about how long will it take you to get that $250 back, but how much the customer will be worth over the lifespan of working together. If it's just a bunch of one and done arrangements, then that's going to hurt your business model. If you have the ability to maintain engagement with them and continue to work with them again and again and again, then you can afford to spend a little bit more to acquire a customer, because that repeat business doesn't cost anything. It still costs to deliver it, but it doesn't cost as much to acquire it. And so all of these pieces work together to just understand what those key metrics are to being a profitable business. And you can change them based on what you're seeing. If you don't like what the numbers say, just think back to what we talked about in the very first module, being very realistic with the truth of what's going on in the business. And the more you understand these numbers, the more you can start to adjust them and manipulate them to look the way you need them to look to grow profits and to grow cash flow. The next piece, so the first piece in keeping your cash is making sure you have a profitable business model and asking those key questions that can help you become more profitable by changing them. The second one that is often overlooked is turning your AR, accounts receivable, into cash quickly. And so this is where a lot of times people will see their financial reports and be confused because they don't necessarily speak the same language as what is happening at the cash flow level. Because for us, we work with a lot of law firms, and law firms are kind of notorious for sending out invoices and possibly not collecting. And when you don't collect on those invoices, you don't get cash flow. And so you may have delivered the service, you may have sent the invoice, you may have counted it as profit on your income statement, but you don't have the cash flow. And so best thing to do is make sure you are putting things in place to collect those that cash so that you can use it to reinvest in the business. So some things you can do. Accepting credit cards. Now I know when you accept credit cards, you have a fee associated with that, but a lot of times it's worth it because money with a fee taken out is better than $0 with no fee taken out. So to accept credit cards, make it easy on your customer, make it easy for cash to hit your bank is a lot of times a huge help in capturing cash flow. Another thing you can do is track your accounts receivable in real time. So this helps a lot of people when you look at a dashboard that's telling you who owes you and how past due their payments are. It makes it a whole lot easier to follow up. A lot of times our failure to follow up on invoices is number one due to just the failure to track it, and because we don't really keep track of what's going on and we're not aware of how significant it is and how much we're missing out on. The second piece, and the reason why we don't follow up, is because it's tedious and nobody really likes doing it. Put tools in place that automate this. We use Xero accounting software, and Xero you can set up to continue to automatically send reminders until an invoice is paid. So these are just some of the things you can do to make sure you aren't building up your accounts receivable and failing to capture the cash. The next thing you want to do in making sure you keep the cash is look forward with your cash flow projections. So as we go through this entire course, our whole objective is to look forward, to drive, and to build our business. And looking forward can absolutely help you in achieving the goals you want. And that's the whole premise that we're building this course on. But looking forward also helps in you avoiding a disaster or a crisis. And so it's really important when you go into Module 3 and 4, where Philip will break down your financial forecast that looks forward, that you are able to spot what's coming ahead, what expenses are coming up, what new hires are you going to need to think about, what will be the impact of those things. Starting to look forward, because what a lot of people will do is things are going well, business is growing, things are moving along, then all of a sudden cash is really tight. That's because you're not looking ahead and you're only looking backward. And so it's important to not only put these practices in place to be profitable and to collect cash flow, but to start to look ahead, see what's coming, so that when you can see a potential cash problem coming around the corner, that you can make adjustments and do what's needed to make sure you're ready for it. And part of that goes into our next point, and the final point is that we all need to be creating a cash reserve. So when you are growing a business, that cash flow that comes back is a really exciting thing. And there's so many things that you can do with it. You can invest in, give your employees raises. You can take some of it home for yourself. You can invest it back in the business. All those things are good, and all those things need to happen. But one thing you also need to do with some of that excess cash is put some of it away. Because, and I know this sounds like your grandpa giving you financial advice, but the truth is you need to have a rainy day fund, because things are not always going to be clean and smooth and continuing along on the same path that they have been. There's going to be times where things change. There's going to be times where you need excess cash flow, or an opportunity that comes where you can spend cash and benefit the business. And you need to have cash on hand. Not to mention, you need to have cash reserved to pay taxes at the end of the year, but you also need it for the business as a whole. You need to start to build the cash reserves and not just spending it all. And what that does is it gives you options. You don't get your hands tied. You don't get stuck. You need to have options. So you need to invest them into the business, but make sure you keep some on hand so you have options to deal with some of the issues that may come. So let's just recap that, because we covered a lot of ground in this section on how to keep cash in the business. Here's some things you need to do to make sure you keep cash in the business and not let it bleed out. Number one is understand your profitability metrics. We gave you some key questions that you can ask to keep an eye on profitability. Second is really simple. Convert your accounts receivable into cash. Make sure you're collecting it. Third, you need to project your cash flow into the future. So not just be surprised by a cash situation, but to be looking forward so that you can be ready for it. And finally, you want to create cash reserves. So build those up, because it gives you a whole lot more options and things you can do to make sure the business is healthy going forward. And if you do these things, you will have a good handle on how to make sure you don't run out of cash, which is a great thing, and make sure you keep your business sustainable and healthy and give you peace of mind as the business owner. So in the next section, we're going to talk about more of the fun stuff of how once you've done this, you can then multiply your cash flow and generate more, create more good in the world because you're generating all that cash. Hope that made sense, and I will see you on the next one.